Welcome specifically to Macro Money Talk, where we uncover the hidden strategies used by the wealthy to protect their financial future. We often believe cash is safety, yet history proves that paper money is fragile, constantly losing value due to relentless inflation. When economies stumble and markets crash, holding cash is risky, while true assets stand firm against the chaos of collapse. To survive the coming financial storms, you must shift your focus from saving currency to owning assets that hold real value. Today, we will explore 7 specific asset classes that have historically preserved wealth during the most turbulent times in human history. These assets are not just investments. They are essential tools for survival, growth, and maintaining purchasing power for future generations. Wealth is not built overnight, but through understanding the fundamental difference between money that disappears and assets that endure forever. While currency can be printed infinitely by central banks, real assets have scarcity, utility, and intrinsic value that cannot be faked. Let us begin with the most tangible asset of all, real estate, the foundation of wealth for the world's richest families. Real estate is not just about residential homes. It encompasses agricultural land that produces food, essential for human survival and society. Even tech billionaires like Bill Gates are quietly accumulating massive amounts of farmland, now owning over 270,000 acres. Commercial real estate in prime locations offers another layer of security, providing steady rental income regardless of short-term market fluctuations. The key factor here is scarcity. They are not making any more land, making it a naturally appreciating asset over time. Owning property gives you control, tax advantages, and a physical hedge against inflation that paper assets simply cannot match. Development projects create value by transforming raw land into usable space, generating wealth through active improvement rather than passive speculation. Unlike gold or art, real estate pays you while you hold it, providing liquidity to reinvest during difficult economic times. History demonstrates that while housing markets may dip temporarily, the long-term trajectory of well-located real estate is always upward. From New York to Tokyo, prime real estate remains a universal store of value, recognized and desired across every border. This asset class allows you to leave a legacy, passing down tangible wealth that your children and grandchildren can utilize. Next, we move to the financial markets, specifically focusing on high-quality stocks or equities in established and essential global companies. Yet we are not talking about risky speculation, but blue-chip companies that dominate their industries and have survived decades of challenges. These businesses provide goods and services that people need every day, ensuring revenue continues to flow even during recessions. Companies like Coca-Cola have survived world wars and Great Depressions, proving their resilience and ability to adapt to any situation. The magic of these stocks lies in dividends, which are regular payments of profit shared directly with the loyal shareholders. Ownership in these giants means you own a piece of human productivity and innovation, aligning your wealth with global progress. Owning a share of Apple is owning a fraction of their infrastructure, intellectual property, and their massive cash reserves. As inflation drives up the price of goods, these companies raise their prices, protecting their profit margins and your investment. And its brand loyalty commanded by these companies creates a protective moat, making it difficult for competitors to steal their market share. Legendary investors like Warren Buffett have built fortunes by holding these boring yet profitable companies for extremely long periods. Through the power of compound interest, reinvesting your dividends can turn a modest investment into a substantial fortune over time. Now we turn to the only asset that cannot be taxed, stolen, or confiscated by any government: your own education. True wealth begins in the mind. Investing in your knowledge and skills provides the highest return of any asset class. Understanding how money works, how to read balance sheets, and how to analyze markets is crucial for maintaining wealth. In a rapidly changing world, the ability to learn new skills and adapt is the ultimate insurance against economic obsolescence. Critical thinking allows you to filter out noise, spot scams, and make informed decisions when others are panicking in fear. Whether it is financial literacy or a specialized trade, high-value skills ensure you can always generate income anywhere. If you stripped a wealthy person of their money but left their knowledge, they would rebuild their fortune within a few years. Books, seminars, and mentorships are small investments that pay dividends for a lifetime, compounding your intellectual capital daily. Networking with other educated individuals also creates opportunities, as your net worth is often correlated with your network. The best way to solidify your education is to teach others, creating a cycle of value that benefits your community. Our fourth asset is the oldest form of money known to mankind: precious metals, specifically gold and silver. Gold and silver are global financial insurance, recognized as a store of value in every culture and country on Earth. Unlike fiat currency, which eventually goes to zero, gold has maintained its purchasing power for over 5,000 years. Precious metals do not rely on a counterparty. They have value in themselves and do not require a government promise. When stock markets crash and currencies collapse, investors flock to gold, driving its price up and protecting your portfolio. Silver offers a unique opportunity, as it is both a monetary metal and an industrial necessity for electronics and solar panels. Holding physical metals gives you privacy and security outside the digital banking system, protecting you from cyber threats. An ounce of gold bought a fine suit in the 1920s, and it still buys a fine suit today. Gold is difficult to mine and limited in supply, ensuring that inflation cannot be created by simply printing more of it. Central banks around the world are currently buying gold at record rates, signaling their lack of faith in the dollar. Allocating a portion of your portfolio to metals is not about getting rich, but about ensuring you never become poor. Asset number 5 is often considered the safest haven in the financial world: government bonds, specifically from stable nations. Bonds represent a loan you make to a government, which they promise to pay back with interest over a set period. US Treasuries, German bonds, and Swiss bonds are viewed as risk-free benchmarks, essential for preserving capital during extreme volatility. While they may not offer massive returns, they provide stability and predictable income when stocks and real estate are falling. Bonds act as a shock absorber for your portfolio. reducing overall volatility and ensuring you have liquidity when needed. The regular interest payments, known as coupons, provide a steady stream of cash flow that retirees and conservative investors rely on. The market for US Treasuries is the most liquid in the world, meaning you can sell them instantly without delay. Smart investors increase their bond holdings as they get older, prioritizing the preservation of their wealth over aggressive growth. In a deflationary environment where prices fall, the fixed payments from bonds actually become more valuable in real terms. Understanding how interest rates affect bond prices is a key skill for navigating the macroeconomic cycles of the future. By including bonds, you create a balanced foundation that allows you to take calculated risks in other areas of investing. For those seeking beauty and exclusivity, asset number 6 offers uncorrelated returns. Fine art and high-end collectibles. Works by masters like Picasso or Monet are unique assets. Their value is not tied to interest rates or earnings reports. Luxury watches like Patek Philippe have outperformed the stock market in recent years, or driven by scarcity and status. The super rich use art to store millions of dollars in a portable canvas that can be moved across borders easily. Art and collectibles often move independently of the stock market, providing diversification that protects you when traditional markets fail. Classic cars are another tangible collectible where passion meets investment, often appreciating significantly as models become rarer. Fine wine and rare whiskies improve with age, becoming more valuable assets simply by sitting in a cellar. The key to this asset class is knowledge and authenticity. You must understand the market to avoid fakes and overpaying. Owning these assets also provides entry into exclusive social circles where deals are made and networks are expanded. While traditional art dominates, the definition of collectibles is expanding, offering new opportunities for the modern investor. Many of these assets are stored in free ports, illegally avoiding taxes while waiting for the right time to be sold. Finally, we arrive at the most controversial yet high-performing asset of the last decade: cryptocurrency, led by Bitcoin. Bitcoin is often referred to as digital gold, a decentralized asset that exists outside the control of any central bank. Its value comes from its secure network, censorship resistance, and the fact that it can be sent anywhere instantly. There will never be more than 21 million bitcoins, making it mathematically scarce in a way that nothing else is. While governments debase their currency by printing trillions, Bitcoin's supply schedule is fixed and cannot be altered by politics. Self-custody allows you to be your own bank, giving you absolute control over your wealth without relying on intermediaries. Despite its volatility, Bitcoin has been the best performing asset class in history, turning early believers into millionaires. Now, major institutions and pension funds are entering the space, validating crypto as a legitimate part of a portfolio. For people in countries with collapsing currencies, crypto is not speculation. It is a lifeline to preserve their life savings. Beyond Bitcoin, platforms like Ethereum enable decentralized finance, allowing lending and borrowing without traditional banks taking a cut. As the world becomes more digital, having exposure to the future of money is a prudent move for forward-thinking investors. However, the crypto market is young and wild. Caution and deep research are required before putting in significant capital. Security is paramount. Losing your private keys means losing your funds forever. So technical competence is absolutely necessary. These 7 assets form a diverse arsenal, each playing a specific role in defending and growing your personal net worth. You do not need to own all of them, but you must own something other than cash to survive inflation. True financial freedom comes from diversification, ensuring that if one asset class falls, another rises to carry you. Remember, the goal of wealth is not just a high number on a screen, but the freedom to live life. Treat your finances like a game of chess. Think several moves ahead and position your pieces to win the long game. Real estate provides the solid foundation and tangible utility that underpins the physical economy we all live in. Blue chip stocks allow you to participate in human innovation and corporate profits without having to run the business yourself. Education ensures that even if you lose everything, you have the skills and mindset to earn it all back. Precious metals stand as the eternal insurance policy, protecting your purchasing power when fiat currencies eventually fail. Government bonds offer a safe harbor and steady income, reducing the overall volatility of your investment portfolio. Fine art and collectibles provide beauty, status, and a store of value that is uncorrelated with the stock market. And cryptocurrency offers a decentralized, digital alternative for the future, with asymmetric upside potential for early adopters. The best time to start building your portfolio was 20 years ago. The second best time is right now. Do not wait for a perfect moment or a market crash. Start small, be consistent, and let compounding work for you. If you found value in this video, please like and subscribe to Macro Money Talk for more financial wisdom. Share your thoughts in the comments below. Which of these 7 assets do you trust the most for the future? Take action today by reviewing your own assets and identifying where you might be too exposed to cash risks. The economic world may be uncertain, but with the right assets, you can navigate any storm with confidence. Patience, discipline, and knowledge are your greatest allies on the road to building lasting and generational wealth. We are living through a major shift in the financial system. Make sure you are positioned on the right side. Let your financial compass be guided by fundamentals and history, rather than the hype and fear of the daily news. Surround yourself with people who discuss ideas and assets, rather than people who only discuss other people and spending. Time is the one resource you cannot buy more of, so use your time today to secure your tomorrow. This concludes our guide to the 7 essential assets for wealth preservation in an inflationary and unpredictable world. Thank you for investing your time with us. Remember that the best investment you can make is always in yourself. Thank you for watching Macro Money Talk. Subscribe now to master your finances and build a legacy that lasts forever.